Let's talk to Clive Lambert. He is a director of FuturesTechs. Very good morning to you, young Clive.
Good morning, Nick. It's Friday again.
Yep. Right, 4 thoughts-provoking charts to run through. Let's kick off with the first one. Dow Futures Daily, 200 days, simple moving average, interaction. What does this mean?
Was what we've had all year, really, isn't it? We've had our eyes on this, the green line on that chart there, the 200-day moving average on the Dow. We dipped through it a number of times. You know, that big dip back in February didn't even reach it, but then we did in April and in May, an intraday. On an intraday basis, a few times we dipped through it and then got back again, back in those times. Yep. We've had a couple of closes below there in the last week or two, and I think it's starting to look vulnerable. There's an uptrend line that's broken as well around the same levels. So I think that says to us that we are starting to see downside risk in that could, sustainable. But we've got the US payrolls, we've got the jobs numbers today, and that's the sort of thing that can rescue this, as has been rescued in the past. So that's what people have got their eyes on, and we're waiting to say which way it's going to jump. But I am thinking that, if and when we break below 24,000, then we could go to 23,000 very quickly and beyond.
Understood. Okay, let's move on to the next slide. TNotes on a daily chart. What are your thoughts here?
Well, that's been having that had a big sell-off, but is starting to show some signs of bottoming out now. But we have some resistance, 121.02 to 121.16 on that chart, which is highlighted by that red circle there. Right around that area, we have a couple of old highs. We have a Fibonacci level. We have a neckline of an old head and shoulders pattern. We have the 200-day moving average. Do we need any more things to come together at the same level to say that's important? So there is a key area for that one.
Understood.
Could trade up to there and then see sellers returning is what that chart is suggesting to me.
Okay, let's move on to the third slide, the gold weekly. Being a dog, is it likely to go down, onward and downward?
It has been a dog, but 1238 was a significant low, a bounce from the tail end of last year, and we hit that level pretty much to the tick earlier this week and found buyers. So is there some hope? Is there some hope of some salvation here for the beaten up, for the beaten up bulls? There's also an uptrend line that it dipped through. That's at 1245 this week as well. On the weekly chart we're looking at here. So 1238 to 1245 is a key area of support, and the first, we've had a go at it and found some buyers at last. So a ray of hope for the gold bugs. Okay,
and let's wrap up finally with WTI light crude on a weekly. Onward and upward?
That is what this chart is saying at the moment. It's quite different to the Brent chart actually. The spread between Brent and TI has come right in. But if you look at the weekly on WTI, we got a buy signal of last October, November time when it was down at $50 that said we could go to $85. And when I make calls like that, people give me funny looks, but we're at 75 now, so we're nicely on the way. 79.32 is an interim support resistance level from compliments of Mr. Fibonacci.
Yep.
And really, if you're taking that step back and looking at that weekly chart, it says there's really nothing to worry about unless we were to break back below 69 and then $64. So, it's looking strong. It's looking nice, that one.
On that note, young Clive, thank you very much indeed. That's Clive Lambert.
Good one.